Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Glad you're with us. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Mike Shorr, Director of Trading Education at Prosper Trading Academy. Great to see you both on this Monday. You know, we're kicking off a new week, earnings, CPI, and we're hitting highs. Highs on the NASDAQ, highs on the S&P. Mike, where do you think we're headed?
I mean, it's tenuous, but it's really hard, and you've been wrong for a long time by trying to fade these up moves. So I'm still in a cautious bullish type of situation, buying pullbacks in names that you love, and but you know, taking profits probably earlier than you normally would. It does feel toppy. And ultimately, I think that we are higher than this at the end of the year, but I don't think it's going to be a straight line between now and then.
So that's really specific, you know, about buying the pullbacks, but also taking those profits sooner than later, not waiting it out and saying, hey, we just made some money on this, let's take some money off the table. That being said, let's talk about Live Nation a little bit. I mean, I think that a lot of folks look at this as, you know, it was the COVID reopening play, and then it became even just people getting out, even it's becoming even a political play somehow. Interest rates, I don't know, you tell me, but it's certainly had a choppy market in the last few months after hitting a high of 107.
Yeah, and you know, they do and probably are going to continue to have issues with regulators. If you can withstand that, it is resilient. And, you know, from a cyclical standpoint, you know, we are in the middle of concert and festival season and things like that. So I am looking, if it breaks out, I'm looking to go with it. You know, right now it's off a little bit on the day. So I'm looking for a breakout here and take that momentum. Again, you know, you can't be comfortable long or short here. You can't be surprised if you take any directional bet and you're wrong. And so that just means you tighten up your risk, you pull in your profit targets, and you know, you move on and do a bunch of smaller trades.
Yeah, so seeming at least trying to play on the positive. Oppenheimer not that long ago put a 110 target on it. Let's hear what you have to say, Ben, about the charts, please.
Right now, Nicole, 95 is a key level, so this is going to be a big hurdle for the bulls to get back above and hold above. If they do, I think you could just kind of add a couple more checks in that positive or areas in that column, that positive column. Let's begin with the 5-minute candle chart and work our way up and look at the bigger picture. Longer term, I just want to start with a prime example of what we look for, the 2 phases of price development, horizontal into vertical, and then back into a horizontal phase. I mentioned the significance associated with the $95 level. We're going to begin with that on the 5-minute time frame and how we're just kind of chopping around that. We traded up to 96.80 into the middle of last week, but didn't really see any real follow through to the upside there. We've just gone again and started to balance here around this $95 level. But just taking a look here at sideways consolidation, low conviction trades were in this pattern here, but acceptance, simply put, of the run-up that we saw last week. So stepping away from the 5-minute candle chart, we're going to go into an hourly look at some price activity here. And this brings us all the way back to, you can see when stock was trading down around that $75 level. That was November of last year into the beginning of this year. Strength, right? High conviction, February into March. We're talking topping out around 107. And even though we've come off that level, again, still kind of holding up around 95, right? So you see the significance associated with it on the 5-minute candle chart, now on the hourly, and similar pattern playing out on the daily. Look at this. So we've gone from a look at 5-minute price activity, look at the last couple days, to last few months, to now we're talking about, well, last few years. And a similar bullish pattern here. We're balancing around 95. I talked about the significance with that level. Build momentum up and through here. You retarget 127, 128. I also wanted to show you where we are relative to the 50 and the 200-day moving average. You can see we're holding above both, Nicole.
Yeah, understood. Look, and bouncing around and seeing whether or not it can do that kind of breakout. But Mike, I mean, you see, it seems like you're doing a lot more short-term trading these days, like Live Nation, right?
Yeah, I mean, this is a regular July, so July 19th. If we get above 96.80, 97.5, $100 call spread, you should be able to buy for about 65 cents. And that's going to give you nearly, well, it's 2.85 to 1 reward to risk ratio. And so, you know, we don't have to go and make new highs for this thing to max out or anything like that. So just a quick breakout, and you know, and hopefully it goes with us when it does.
Yeah. Next up is Moderna, which had such a nice run from $62 up to $170, but has been in somewhat of a downtrend since then. What jumps out at you here?
The 100-day moving average is what jumps out at me, and it's been holding it like a boss. So I don't think that we are going to go rocketing up here. I do like the support here. Implied volatility is a little bit on the high side, so that gets me thinking into things like iron condors, and that's exactly what I'm looking at. I'm looking at actually a bullishly biased iron condor, so that means that my short put spread is going to be closer to the money than my out of the money short call spread. Basically, just
okay. So let's hear. Yeah, no. I understand what you're saying. So let's see what Ben has to say about the chart. Ben?
Yeah, as I'm taking a look here, we'll grind out a couple different time frames here, but I wanted to start with what's somewhat bearish on a 5-minute candle chart. High conviction trade lower and then sideways consolidation around 117. We're talking Moderna has really yet to recover from some of the selling that we saw into the end of last week. And, well, yeah, I should say just holding these lower levels as we kick things off here, right around this 117 area, balancing and consolidating. So the high conviction came on the left side of the screen, and now we're consolidating, and now we're in a horizontal pattern here, just basically accepting this new lower level. But this is a pattern we've seen play out a couple times, right? That L-shaped type pattern. As we step away from a 5 to now 1 hour candle chart, we're going all the way back to when the stock was trading up around that 170 level. 4 really well-defined areas of consolidation have established themselves at lower and lower levels. You can see we're currently balancing again around this 120 level. Hey, the way I see it, as long as we hold below 135, we're still in a bit of a bearish pattern. So you don't really get that optimism or that kind of idea that we're starting to bottom out until we establish or take out that 135 level. Right now, the bears are hoping for a breakdown, a new area of value to form at a lower level. Let's take one more step back. I've got another chart for you to show you just where we are as far as, again, kind of getting back to that 5-minute candle chart here and the look at the last few days where the price activity. Look at this, almost an identical pattern, but we've now added, well, quite a bit of time on. We're going back to the beginning of 2021. If you remember, stock was trading up around 497, almost 500. Big move lower, sideways consolidation. I think it was the 5-minute we were talking about significance associated with 117. Here you can see that balance area that we're forming right now is right around 150. So holding below that, stock's under pressure. It's been coming under pressure for some time right now. Yeah, difficult to get excited about one that's just, again, exhibiting so much bearishness here.
Okay. All right. Let's hear it. So tough to get excited. It's certainly exhibiting some bearishness. You're watching the 100-day. Mike, tell us a little more about your trade.
Yeah, so I like the structure of this trade. Now Ben and I disagree. You know, I'm a little bit more bullish than he is bearish, but I really like the structure of this trade. So not only is it bullishly bullishly biased by being closer to the money. But it's also it's a bit asymmetric in how I set it up. So the 112, 115 is the put spread that I'm going to sell, and then I'm going to sell the 123, 125 call spread along with it. You should be able to take in about $1.85 to do that. So my maximum downside risk is $1.15. So I even to the downside, I have better than 1-to-1 risk. And then if we do go up, the most I can lose is 15 cents. And hopefully I'll be able to buy it back before then. But, you know, if you get a blowout move to the upside on some FDA report or whatever. So I like the structure. And, you know, like I said, Ben, you know, that's why we have markets. You know, Ben's a little bit more bearish than I am. I'm a little bit more bullish.
Yeah, the question, I liked how you said it too. At first you were like, I'm a little more bullish than Ben is bearish. So, you know, you're quantifying how bullish, how bearish, right? Let's get now to Nike, which Wow, that last quarterly print got the stock walloped, right? It seemed to be holding on and then had this big downturn. And the analysts did not, they were waiting for the next big thing or some great move from Nike. It's at $73 and change today, Mike. Where do you think it's headed and why?
I think I hope that it's going higher than where it is now, because I do have it's bullish in nature in the fact that it's not bearish. It's down well over 20%, and I know that the numbers were horrible and everything, but I did some back testing on this, and a similar type of formation is it's happened about 5 times in September of 2022. Out of those 5 times, 4 times we've had rallies off of this type of setup. And so that's going with me. And then just looking at it and what Nike is, and, suddenly it didn't just become, half of what it was worth. I mean, even though it's trading just about like that. So it's a little bit of an aggressive non-bearish play. I guess that's the way that I'll put it.
Yeah, I mean, this is looking today as the lowest close since March of 2020. Ouch, right? Ben, take a look at this chart.
Yeah, I'm going to push back on this one. I think this chart is extremely bearish here, and there's been no rejection of these lower levels. And in fact, as we speak, we're seeking value lower on a 5-minute. Actually, I've got a 30-minute candle chart here. Let's just take a look. I mean, speak about a textbook example of those 2 phases of price development. You can see the consolidation, horizontal phase, balancing out around this $95 level. And then you can see, look at this vertical move lower a couple weeks ago into the end of last week, and how we have yet to reject that lower level. And in fact, as I take a look here, it appears to me as if anything, we've just gone back into another vertical phase lower after going a bit sideways around 75. So seeking value lower, the bears are looking for a new area of consolidation, a horizontal pattern to form below where we are right now. But the way I see it, until we get back up above 95, again, they're behind the wheel on this one. And again, there's been some weakness not only on the short-term time frame, but also take a look here. You've got another, Nicole, you mentioned this big move, but another bearish pattern here. We've gone from a 30-minute candle chart to a daily when the stock double topped up around 179, 180. If you remember back in 2021, that was an attempt to break out to the upside. It failed. We've come off since. We're balancing, breaking out, I should say, of a balance that formed around 110. So this is, again, the bears in control here, seeking value lower right now on a daily candle chart and on that 30-minute candle chart. One more time frame here. This is the most bullish case scenario that I can find here for Nike, and it's a really long-term one. You can see a well-defined trend up off that 2010 low. That was around 15 to just shy of 180 in the fall of 2021. Some heavy lifting for the bulls to do, though. We talked about this last time we looked at Nike. They got to get this thing back up above 130 before they take out 55. And again, it's not looking great right now. We're working our way back down to those pandemic lows here, you guys.
Yeah.
Yeah, I mean, that's exactly right. When I saw that it's going to be the lowest close since March of 2020, there's not many stocks that we're saying that about.
No.
It really sort of means something. And, he wrote still some heavy lifting to do here. There's just not that many stocks that are back to those kinds of levels. Mike?
No. Yeah, so I totally agree that it is a leap of faith. But I do like the setup that I have here. We actually need to rally a little bit to get in at the price that I want. But with implied vol is really high here, and it should be. So you want to take advantage of that. And I think selling it when you have no position in it now makes 0 sense to me. So if we can put something together, so if we rally a little bit, so I am looking at the 70, 73, 74. 1 by 3 by 2 put. It's a ratio butterfly. 1 by 3 by 2. So long 1, short 3, long 2. And if we rally a little bit, you should be able to get about 75 cents credit for it. Then if we go down to 73, that's the best place for that to be. Then you're actually going to sell it. You're buying it for a credit and you'll sell it for a credit. Now, if we lose 73, then it gets ugly and you just got to stop yourself out of this trade. But anywhere above 74, you keep that 75 cents. At 73, you make $1. So, so net you make $1.75, and then you're going to have to use that profit probably to blast yourself out of this if we can't hold 73.
Right, and you have about a month for this.
A little bit more
August
complicated.
9th. Okay. Yeah. No, you said it right. Nice to see you both. Mike Shorr, Prosper Trading Academy, and of course our own Ben Lichtenstein there on the charts. Thank you both for the big three today. We had Live Nation, Moderna, and Nike there.